and I've had a very interesting morning learning a great deal about the current and future road infrastructure here and in Greece. But I'm going to move on to a different aspect of transport in a moment. There was a famous scientist and naturalist in the 19th century called Charles Darwin, and he said that the species which survive are not those that are strong, but those that are adaptable. That's true of nature and of the survival of species. It's also true today of national economies. We live in a truly global economy, and business is more mobile than it has ever been in the history of the world. There may be a corporate headquarters somewhere in America where they look at a map and they say, shall we invest in Romania, in Bulgaria? Shall we invest in the UK? Shall we invest in France? Without even going to those countries. They will make those choices on very hard-headed criteria. They may even choose between Europe and Asia. And the decisions will be based on the tax systems in the countries concerned, the quality of the workforce, how well educated it is, whether it has the right skills, on the employment laws in the countries, on the local market for the product or the service they're offering, but it will also more and more be taken on the basis of the infrastructure in those countries. And I mean infrastructure in the widest sense. I mean the energy infrastructure, I mean the IT infrastructure, and of course I mean the transport infrastructure. 20 years ago, if you left Western Europe or North America and traveled to the Middle East or Asia, very often you felt you were going from the developed world to the developing world, from the first world to the third world. But that's not true any longer. Airports, roads, bridges, tunnels, railways have all improved dramatically in the Middle East and Asia in the last 20 years. If you arrive in Hong Kong or Singapore, you feel as though you're in one of the most modern places in the world. You've left the third world sometimes in Europe. I can't overemphasize the importance of transport infrastructure. No country in the world will be competitive economically in the 21st century without a modern transport infrastructure. And Europe, in particular, needs to invest more in transport infrastructure. Too much of our transport infrastructure right across the EU is 20th century. It's out of date. It's not fit for purpose. I want to focus, though, not on roads, which we've heard a lot about this morning, but on rail. Trains were invented in the United Kingdom in 1830. They had 100 years of terrific boom worldwide, paid for by private investment in North America, South America, across Europe, parts of Africa, the whole of India, and many other countries. Then, in the middle and late 20th century, railways declined as the traffic shifted from rail to road, and, of course, to the air as well. For half a century, transport's been about cars, about trucks, about aeroplanes, about roads, about motorways, about airports. But the 21st century is going to see a revival of rail. It's going to be a new era of rail travel. And that's about high-speed rail in particular. High-speed rail is much faster than going by car. High-speed rail competes with flying for journeys up to 1,000 kilometers. And as trains get faster, and they are getting faster, high-speed rail will be competitive with flying up to 1,500 kilometers. The sheer misery, the frustration, the aggravation, the difficulty of working on a scheduled flight is driving more and more people to alternative methods of transport. And there's one more factor which is boosting high-speed rail. That's climate change. We're more conscious today than ever of the need to limit greenhouse gas emissions from transport. Flying will become unacceptable for short journeys. In the European Union, emissions from flying will soon be part of the EU emissions trading system. Eventually, that will raise the cost of flying. In some countries, including the UK, we already impose large taxes on the cost of an airfare. Europe has been a pioneer so far in high-speed rail. It started in France with the TGV in 1981. It was soon followed in Italy and Germany. Spain has now caught up. Sadly, and rather shamefully, the United Kingdom is lagging behind. And high-speed rail hasn't really yet come to East or Central Europe. France has 1,872 kilometres of high-speed rail track. Spain has 1,600. Germany has 1,300. Italy has 900. But all those countries are now being overtaken by China. China already has 3,500 kilometres of high-speed rail, and they only started 2 years ago. There's another 6,700 under construction today. Another 2,900 on top of that being planned. In 6 years, by 2014, from a zero start, China will have more kilometres of high-speed rail track per head of population than the whole of the EU. And that's even though China's population is more than double the EU's. They're even talking about linking China to Europe with a high-speed rail line. You'll go from Berlin to Beijing in 2 days. 3 weeks ago today, I travelled on the line from Tianjin to Beijing. Very impressive, 320 kilometres an hour. In the 2 years since it's opened, it's already carried 40 million passengers. It is equal to anything we have in Europe. I honestly believe that countries which do not link their main cities with high-speed rail, that do not link their main cities with the main cities in neighbouring countries with high-speed rail, by the middle of this century will be at a big competitive disadvantage. Developing a Europe-wide high-speed rail network is now an explicit aim of the European Union. Now, like most transport infrastructure investment, high-speed rail is expensive. Usually, the whole cost of developing the track is borne by the government, or at least the schemes are dominated and led by government finance. And that will continue, though I hope and expect we'll see more PPP schemes for high-speed rail in the future. But there was one very ambitious international project completed 16 years ago, which was financed entirely by private investors and lenders. Eurotunnel, which is the longest tunnel under the sea anywhere in the world, linked the UK with France. And when the governments of UK and France decided to go ahead with this project in 1986, the UK Prime Minister, Margaret Thatcher, said not £1 of taxpayers' money from either Britain or France is to go into this scheme. It had to be financed entirely in the private sector. The cost then was estimated to be roughly 5 billion euros. It turned out, because of the delays, the difficulties, that it actually cost 10 billion euros. And 8 billion, more than 8 billion of that, was debt. The small balance was put up by equity investors, of whom I regret to say I was one. The tunnel opened 8 years later in 1994. The traffic levels were lower than expected. The cost of the debt was, of course, much higher than expected, and it struggled financially from day one. The founding investors lost about 98% of their money. Not my most successful investment. After the opening, there were several attempts to refinance it. More equity was raised, but by 2006, the debt was still 7 billion euros, and the financial structure was unsustainable, even though the actual operations, the usage, the traffic on the trains had gone up. Gradually, it was clear that the shares were worth nothing unless there was a complete restructuring of the debt, and various plans were put forward, including one in 2006, to exchange the debt for 87% of the equity. It was proposed, it was rejected. All the serious institutional investors who had put money in at the start gave up, sold their shares, and the company was owned by a bunch of individual speculators, which made the negotiations extremely difficult. In August 2006, the company was placed by the French court into bankruptcy protection. And along came Goldman Sachs and Citicorp, and they refinanced 2.8 billion pounds, that's just over 3 billion euros of the debt. That was about 60% of it at that time. And they converted the balance, I'm sorry, that was about 40%. They converted the balance, which was 60%, into equity. That deal was masterminded by the new chairman, Jacques Gounon, and it was the financial turning point for the project. With the debt cut by 60%, if you think about it, any business which can say we're writing off 60% of our debt suddenly becomes a more profitable business. With the debt cut by 60%, it was possible for the company to move forward positively. The business moved into profits for the first time in 2008, and a dividend was paid to shareholders for the first time in 2009. That made it possible to raise more equity, to repay some of the loans. And today, the business is a strong and viable business. Last year's revenues, 640 million euros. The current year, trading is better. Operationally, the business is a success. We have captured in Eurotunnel 3/4 of the traffic that used to fly between London and Paris and between London and Brussels. 3 out of 4 customers now choose to go through the tunnel. Almost half the lorries crossing between the UK and France choose the tunnel, despite the fact that the alternative, which is to go across by sea, is subsidised. We expect those trends to continue. Since the tunnel opened, 250 million people have gone through it. That is more than double the total population of the whole of the UK and the whole of France. In the first half of 2010, 200,000 passengers used it every week. 3,000 trucks went through every day. 6,500 cars went through every day. The tunnel operates 365 days a year, 24 hours a day, a genuine 24/7 business. The greater financial strength has now allowed Eurotunnel to expand by acquisition into the rail freight business elsewhere in Europe. The shares are now listed in Paris, and they're part of the CAC Next 20 index of leading French companies. It also benefits from offering the greenest route between the UK and Europe. The electricity used by the trains is bought in France, where it's generated mostly by nuclear power with very low greenhouse gas emissions. Today, the shareholders' equity is £2.5 billion. This is a financial and operationally viable company. It's a project which was challenging both technically and financially, but it is now established and successful against competition which receives subsidies in the harbours and a tax-free fuel for aeroplanes. I believe the example of Eurotunnel shows that large-scale transport infrastructure projects can be completed even if they rely heavily on private sector investment. Although having said that, I would expect most future projects to remain largely taxpayer funded, even though the PPP model may become more common. I believe the future for Europe will be prosperous if we do invest in our transport infrastructure. It will require large sums of money. It will require courageous decisions by politicians. But without it, we will struggle to compete with the rising economies of the Far East. Thank you very much.